Did you know interest rates are set to rise again in 2024? This could mean big changes for home buyers and investors.
That's the hot topic right now. With Cathie Wood and others weighing in, we'll explore the ups and downs of the Texas housing market.
Welcome to Financial Insights in Minutes, where we summarize today's crucial real estate videos quickly.
Join us as we digest the expert analyses from across various channels.
So, let's get straight into the video summaries that matter. First up, Reventure Consulting tackles Home Depot's financial struggles and its implications. Next, Real Estate Mindset exposes shocking truths about our labor market. Ken McElroy shares insights on raising capital effectively in real estate. Melody Wright revisits the latest Redfin updates alongside revised job numbers. BiggerPockets reveals top strategies for new investors entering the market. Ryan Scribner discusses untapped business ideas for 2024 that could reshape investments. Another perspective from Real Estate Mindset on the unsettling unemployment landscape. Lastly, more warnings as Real Estate Mindset highlights Social Security concerns. Ahoy there! Welcome back to Reventure Consulting. Time to navigate the tumultuous waters of the economy, and wow, do we have a strong current to chart through. Today's topic: the troubling news from Home Depot that could signal much bigger problems for our economy.
And let's get straight to the facts. Home Depot has reported its first revenue decline since the dark days of 2008. This isn't just a company story. It's a reflection of broader economic currents.
What's the alarming revelation we can glean from Home Depot's latest earnings?
The core thesis indicates this revenue dip is a troubling sign for the economy. If Home Depot, the bellwether for home improvement, is struggling, what does that say about consumer spending and housing activity overall?
Let's dive deeper into that revenue decline. What are the hard facts?
Home Depot experienced a 3.6% drop in same-store sales this year. The CFO disclosed that consumers are feeling uncertain, leading them to defer spending on major home projects.
And what about the housing market trends linked to their sales?
We're seeing a drop in housing units under construction down to about 1.5 million. That's a significant decline, often a precursor to economic downturns.
So, how is the average American faring financially?
Wage growth is stagnating at 3.5%, which is just keeping pace with inflation. The personal savings rate? A meager 3.4%. That's near historical lows, making consumer spending shaky at best.
Looking ahead, what does our expert foresee?
If Home Depot keeps flashing these warning signs, we could be staring down the barrel of a recession as early as late 2024. We've seen this pattern before.
What about housing market predictions?
We might see escalating inventory levels leading to steep price drops across the board, particularly if sellers start realizing their homes aren't worth what they think.
So, what's the main takeaway from all this chatter?
Caution is key. With leading indicators flashing warning signs, those looking to buy or invest should tread lightly and keep an eye on evolving economic conditions.
As we wrap up, we want to hear from you. What do you think about Home Depot's report and its implications?
Drop your thoughts in the comments. Your insights could shed even more light on this economic conundrum.
Welcome to Real Estate Mindset. Today, we're diving deep into the shocking revisions in job statistics that reveal the labor market is not what it seems. Joining us is our community expert, Mitch Wexler. He's got fresh insights that may just rock your world.
Indeed. With compelling evidence in hand, Mitch is here to help us peel back the layers of deception surrounding the labor statistics and uncover the reality.
So what's the core message from Mitch's insights? What's really going on with those job numbers?
The main thesis is clear. The labor market has been artificially bolstered with an actual net loss of 818,000 jobs concealed from the public. It's a startling revelation, especially leading into an election year.
Let's unpack those key points that Mitch made. What's the scoop about the job revisions?
The U.S. jobs numbers were slashed by a staggering 818,000, marking the second worst revision ever recorded. This essentially means the administration has been spinning tales about our economic health.
What can you tell us about the true state of the labor market?
Mitch emphasizes that the job growth we thought was strong is fading much quicker than anticipated. Rising unemployment and jobless claims hint at a potential recession on the horizon.
Unrealized gains. Now that's a hot topic. What's the problem with this approach?
The idea of taxing unrealized gains is downright un-American. It's punishing you for what you might gain, yet haven't even realized. This could cripple homeowners financially.
Mitch threw some prediction bombs about bankruptcy rates. What's on the horizon?
Overall, bankruptcies, both personal and business, are set to surge. This trend reflects the distress caused by the job market and the rising economic pressures on everyday Americans.
What's the crystal ball saying for the real estate market?
With rising unemployment and financial strain, foreclosures may spike. Commercial real estate is also experiencing turbulence, hinting at a broader housing crisis that could impact millions.
To wrap it up, what are the crucial takeaways from Mitch's insights?
Mitch stresses that we need to prioritize accurate data and transparency in economic reporting. Only through understanding can we hope to counteract these harmful trends.
As we conclude, how can viewers safeguard their futures?
The first step is knowledge. Awareness breeds action. It's time for concerned citizens to unite, speak out, and hold institutions accountable.
Welcome to Ken McElroy's YouTube channel. Today, we're diving deep into an incredible feat, raising over $43 million in just 6 days. Buckle up, because there's a treasure trove of insights coming your way.
Absolutely. Ken's extensive experience in real estate and investor relations plays a pivotal role in this story. His knack for navigating market disruptions reveals some game-changing strategies. Let's set sail.
What's the vital message from Ken's experience?
The core thesis is that in turbulent markets, those who prepare and act strategically can seize opportunities. Ken emphasizes the importance of timing and understanding market dynamics to capitalize on distressed assets.
Now let's dig into the key points. What's the first big takeaway?
Ken shares that finding properties sold below their value can lead to massive profits. Today's market upheaval helps uncover these golden opportunities where savvy investors can thrive.
What role does communication play in this process?
Essential. Ken stresses that keeping investors updated with consistent communication fosters trust and engagement. It helps mitigate frustrations when the market fluctuates, ensuring everyone is on the same page.
Ken attributes his success to his team. What's the scoop on that?
Ken highlights the importance of having a reliable team to vet deals and manage properties effectively. Trust and collaboration fuel faster and better investment decisions.
What about market timing? How does it factor in?
Ken advises that purchasing during market disruptions can be advantageous. Ensure to assess cash flow potential at the time of investment to avoid future pitfalls.
And what tips does Ken have for deal flow?
He encourages leveraging networking to build relationships that result in consistent deal flow. Remember, getting on lists can provide access to solid opportunities without extra costs.
So what does Ken foresee for the future?
Ken predicts that the current market turbulence might persist, creating even more opportunities. Investors must prepare to capitalize on deals as conditions stabilize.
And what about investing strategies?
Absolutely. Ken believes we'll see emerging investment strategies adapting to changing market conditions, with technology increasingly integrated into managing these investments.
To wrap up, what are Ken's big takeaways?
The bottom line is that acting strategically during turbulent times can yield exceptional results. Ken's insights prove that with the right team and approach, investors can thrive, even when the market gets rocky.
What final words does Ken have for aspiring investors?
He stresses the necessity of building trust with investors through open communication. It's not just about finding the right deal, but also about nurturing those critical relationships.
As we close, we're eager to hear from you. What strategies do you think are critical for today's investors?
Drop your thoughts in the comments. Your insights could spark more brilliant ideas in our investment community.
Welcome back to the M3 Market Update. Today's focus is on the July real estate trends and the significant job number revisions that could shake things up.
Indeed. With the recent job numbers being revised down, the implications for the housing market are crucial. In today's episode, Melody dives into the latest Redfin data and offers insights into where the market might be headed.
What's the central message from today's update?
The key takeaway is that revised job numbers down by 818,000 call into question the stability of the market, potentially impacting both employment and the housing sector.
Let's dive into those revised employment numbers.
Yes, Melody noted an 818,000 job reduction, primarily in professional services, which raises red flags about the job market's health and its repercussions on consumer sentiment.
What can you tell us about the mortgage landscape?
With mortgage rates slightly down, there has been excitement around REIFs, but this boom is conditional and may not materialize unless rates drop further.
What about those July Redfin results?
Sales showed a positive uptick at 4.26% month over month, with homes being priced higher, but the context implies deeper issues beneath these figures.
What predictions did Melody make regarding the job market?
She forecasted that these revisions could stifle job growth and consumer confidence, suggesting a ripple effect on the housing market could ensue.
And what about interest rates?
If rates don't decrease, we could see a plateau in refinance activity, which might also weaken homebuyer sentiment, potentially impacting home sales.
To wrap up, what are the key takeaways from today's discussion?
It's essential to monitor the connection between job data and the housing market, as these revised figures signal deeper issues that could shape the future trajectory of both sectors.
And finally, what's the burning question for our viewers?
As we close, we invite our audience to ponder, how will the upcoming economic decisions play into these housing market dynamics? Let us know in the comments.
Welcome to BiggerPockets. Today, we're navigating the exciting waters of real estate investment, specifically where to invest when starting from scratch.
Absolutely. We'll explore essential factors in choosing a market and hear from seasoned investors Ashley Kerr and Henry Washington on their insights. Stick around for a fun challenge with a chance to win swag.
What's the core thesis of today's discussion?
The main idea is that there's no single right answer when it comes to where to invest in real estate. It heavily depends on individual circumstances and preferences.
What factors should new investors prioritize?
Investors should look at job growth, economic stability, and their personal risk tolerance when choosing the right market.
How important is local market knowledge?
Local knowledge can significantly boost your investing confidence. Being familiar with the area provides insights that data alone can't deliver.
What are the best rental strategies?
A successful investor should explore various rental strategies. Flexibility can lead to increased profits.
What are key differences between Erie and Tuscaloosa?
Erie boasts tourist attractions, while Tuscaloosa is flourishing thanks to its university and solid job market. Both have unique advantages.
What predictions can we make about future market trends?
As markets evolve, investors will need to adapt their strategies. Economic shifts can greatly change property values.
What's the long-term prediction for remote work and its effects?
With telecommuting on the rise, affordable markets may see increased demand as more workers seek better living conditions.
What are the final takeaways from today's episode?
Investing begins with diligent research and being open to changing tactics in response to market conditions. Knowledge is your best friend in real estate.
How can viewers engage with today's discussion?
They can dive into community interactions and market research. It's essential to remain engaged and adaptable.
Welcome to Ryan Scribner's YouTube channel. Today, we're navigating through some extremely exciting waters, untapped business ideas for 2024 that could redefine your entrepreneurial journey.
Absolutely. These aren't just any ideas, they're golden opportunities that many are overlooking. So who's ready to jump on the next big thing?
Let's get to the heart of this video. What's the core thesis?
The landscape for businesses in 2024 is shifting. It's not just about finding a niche. It's about tapping into ideas that haven't been exhausted yet. We're here to explore 5 untapped gems that are gaining traction.
First up, let's discuss this glamping business idea. How does it set sail?
Glamping is basically camping with style. With investments as low as $500, hosts can make over $1,000 in a week. It's about transforming those basic campsites into luxurious escapes.
Next, let's talk about the dinosaur costume rentals. This is a roarsome idea.
Right? With bookings that high, it's not just child's play. For about $3,000, someone turned a fun costume into a flourishing business. Talk about standing out at parties.
Let's dive into niche digital content creation. Why is this a big splash in 2024?
Creating and marketing digital products is a powerhouse industry. With platforms like Kartra aiding your journey, you can convert your knowledge into cash. It's like turning your passion into a paycheck.
Now, What's this about outsourcing as a business model?
It's a game changer. By coordinating with freelancers, you can help influencers manage their workload. It turns those communication headaches into sweet profits for you.
Finally, what's this buzz about user-generated content?
It's all about users creating compelling videos for brands. With simple smartphones, countless people are earning big bucks selling their raw footage. It's a lucrative gig.
Now let's look at some predictions heading into this new business landscape.
With the rise of experience-focused businesses, glamping is just the tip of the iceberg. Think about everything from unique travel accommodations to personalized tour services.
As we wrap it up, what should viewers take away from this?
Innovative business concepts require creativity and adaptability. With these 5 untapped opportunities, the future is bright for those who dare to explore.
And we'd love to hear from you. What unique business ideas do you have?
Drop your thoughts in the comments below. We're excited to see how you plan to navigate your own entrepreneurial waters in 2024.
Welcome to the Real Estate Mindset channel. The buzz this week? Rumor has it that job numbers may be revised down by 600,000 to 1 million. All hell might break loose due to rising unemployment.
Exactly. And with our guest today, the insightful Jack from Nobody Special Finance, we're going to dissect the implications of this grim news and what it means for the economy going forward.
So what's the core idea here? What's the real story behind rising unemployment?
The main thesis is that rising unemployment leads to decreased consumer spending, which is detrimental since 70% of GDP is driven by consumption. With many consumers living paycheck to paycheck, this sets the stage for an impending economic disaster.
What happens when unemployment rises, Jack?
While higher unemployment means less disposable income, this directly reduces consumer spending, which is essential for economic growth.
And what about the labor market?
The number of job seekers has spiked, reaching 28.4%, showing a 46% increase year on year. The average reservation wage is dropping, signaling a willingness to accept lower-paying jobs.
How do government actions impact this scenario?
The Fed's delayed responses to rising unemployment can exacerbate conditions, potentially leading to an inflationary cycle as they resort to printing more money.
Looking ahead, what predictions are on the table?
For one, unemployment could exceed 10%. Once the rise starts, it tends to accelerate quickly.
And what could result from these economic shifts?
We could see more significant market corrections soon. Conditions are ripe for instability, with the lingering effects of artificially low interest rates.
To sum it up, we're faced with a critical juncture in the economy. What's your final take, Jack?
Indeed, rising unemployment is more than just a number. It reflects deeper issues in the economy. Consumers need to be aware of their financial decisions heading into these turbulent times.
What can consumers do to navigate this storm?
It's vital for individuals to strengthen bonds within their communities and financially prepare for what's ahead. Let's hear your strategies in the comments below.
Ahoy! Welcome back to Real Estate Mindset. Today's treasure chest of insights is loaded with vital economic warnings as Target drops a bombshell on its sales outlook and Social Security teeters on a cliff. Joining this wild voyage is our expert, Mitch Wexler. Buckle up.
Absolutely. It's packed with significant concerns about consumer confidence and real solutions to these pressing issues. Let's dive right in.
So, what's at the heart of this matter?
The thesis revolves around Target revealing significant concerns tied to its sales predictions and an overarching worry about the economy. Moreover, Social Security might face a staggering income reduction, posing a serious threat to retirees.
What did Target reveal about their performance?
Despite a modest sales growth, Target's warnings about future performance signaled deeper consumer anxiety. It's a warning siren for the retail sector.
And the Social Security situation?
A perfect storm is brewing. Without intervention, retirees could see a 20% cut in benefits, endangering financial stability for millions.
What about employment trends?
Worker satisfaction is plummeting as anxiety surges around job security. The job market is definitely feeling the heat.
Looking ahead, what should we anticipate?
An economic slowdown seems inevitable. It could push consumers into tighter spending patterns, impacting profitability across retail.
What about inflationary pressures?
As inflation outpaces wage growth, purchasing power will diminish, potentially leading to more severe economic repercussions.
To sum it all up, What are the key messages here?
Consumers need to stay informed and proactive as ominous signs from Target and Social Security forecast challenging times. Navigating these waters is crucial.
What do you think about these economic warnings? How has the inflation crisis affected you?
We want to hear what you think. Drop your insights in the comments below, and let's keep the conversation going.
We explored diverse perspectives on the Texas real estate scene today.
While Cathie Wood perceives growth opportunities, others like Jerome Powell identify robust risks ahead.
The discussion highlighted necessary caution in navigating this volatile market. If you'd like more time-saving content, please remember to like and subscribe. Thanks for watching Financial Insights in Minutes for August 23rd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.